Business has always been about turning a profit, making money. But can it stand for something more? Something beyond dollars and cents? We think so. We think that today, business has a higher calling, a purpose to be fair and just, to do right by their workers, customers, communities, and the environment. And it turns out companies successful doing that also do better for their bottom line. When you see the Just Capital seal, it means this company is a force for good. Visit justcapital.com to learn more.
Good afternoon. We are doing it live on this stormy afternoon here in Southern California. Mottek On Money, now live weekday afternoons at 4. We get right down to business here with the news-driven hour. We are doing more in 2024, now at 4 in the afternoon. Mottek On Money, live on the air here in 790 KABC, streaming live online worldwide at KABC.com, and the on-demand Mottek On Money podcast at KABC.com, Apple, iTunes, and all your favorite podcast platforms. Hope you're doing okay in this torrential downpour here. Stocks starting the week lower, coming off of record highs to kick off the new week after Fed Chairman Jerome Powell went on 60 Minutes over the weekend and said the Fed will take its time in delivering interest rate cuts. Expectations of those cuts sooner rather than later had fueled the market rally in the last couple of months. His latest comments got the market rethinking the path and speed of the rate cuts this year, and the latest earnings news also weighing on the market. We got some earnings news from Caterpillar and McDonald's after we got those big tech earnings last week, which drove the market to record highs. The Dow today coming in for a closing loss of nearly 300. The S&P 500 down nearly 16, and the Nasdaq slipped 31 points. Both the Dow and the S&P 500 coming off the record highs we hit on Friday. Some new readings on the economy today. On the services sector, the Institute for Supply Management Services Index moved higher in the month of January, coming off a 7-month low in December. We heard from Fed Chairman Jerome Powell on television over the weekend. He pushed back on the idea the Fed would cut rates in March. We also got the release of that jobs report on Friday. That's the big enchilada of monthly economic reports, which showed a surprisingly strong 353,000 jobs created in the month of January. The Fed is focused on jobs as well as inflation, which is still running hotter than the Fed's target of 2%. New worries about the banks sector, with the regional bank shares extending their slide from last week. Markets reacting to Fed Chairman Powell's comments. Also, we're watching what's happening in the Middle East. Tensions rising there. The Israeli-Hamas war continues, and now U.S. warplanes reportedly destroyed or severely damaged most of the Iranian and militia targets they struck in Syria and Iraq over the weekend, according to the Pentagon. The first major shots in what President Biden has said will be a sustained campaign. We heard from the Pentagon press secretary today saying that more than 80% of some 85 targets in Syria and Iraq were destroyed or rendered inoperable. Benchmark government treasuries moving lower today, sending yields higher, including the yield in the 10-year note, which impacts the fixed-rate mortgage rates. The yield in the 10-year note now 4.16%, sending those fixed-rate mortgage rates above 7% again. I'll talk about that later this hour. And real estate with Jeff LAZERSON, the president of MortgageGrader.com and OC Register real estate columnist. The homeless crisis in Los Angeles getting new attention today because of this epic winter storm, the atmospheric river, which has hit LA's estimated homeless population of at least 75,000 hard, flooded streets and homeless encampments, sending thousands of people looking for shelter and help. The Union Rescue Mission in downtown Los Angeles is helping thousands of people today and daily. Now, with the weather like this, you can just imagine what the situation is out there. We'll get an update this afternoon from Richard NEWCOMB, Vice President of Philanthropy at the Union Rescue Mission. But first, on your money, the markets, the economy, and the whole works now. Joining us live is Jim HAUSBERG, Managing Director at Hightower Advisors, the HAUSBERG Group in Beverly Hills. Jim, thank you very much for taking the call. Even Beverly Hills hit by this storm, some power outages there. Hope everything is okay with you, Jim. Give us an update on this big news here today.
Well, I've been one of those folks, Frank, that have been going back to the office for a long time, and I enjoyed being there. But I worked from home today. Walked outside, saw the streets, and decided to let's do it from home. So fortunately for the technology that we have access to, we're able to do that. Yep. I feel bad for all the people out there, especially the homeless. Horrible time to be outdoors. So anyway, hope everybody does okay. Certainly. And charities you're involved with are great causes. So will make a difference.
Thank you, Jim.
Anyway,
yes,
markets, markets, yes, we're into the second month of the year. The market did very well in January. Maybe the average numbers weren't up so high, but there were some fabulous earnings reports, especially from the Magnificent Seven. now being called the Magnificent Six because of Tesla's recent issues. We keep coming up with new acronyms, Frank, so we'll see where it takes us.
Yep.
But,
Keep
you know,
coming.
the earnings out of Microsoft and NVIDIA, Amazon, Apple, Google, you know, in some cases, Meta was the big surprise. Just doing incredibly well. Industrials numbers are coming in strong there. So what we really need for the markets is to be more broad-based. We're starting to see some positive movement. Like I said, in industrials, financials are trading better. Technology, the consumer, a lot of these names are doing well. We had great GD print in the fourth quarter. And rates, as much as, you know, they're higher than they've been. I saw Chairman Powell last night as well. I thought the guy did a great job. He's a very calming influence to me on markets, and he's doing the right thing. He's not going to bring down rates too fast. He's going to wait for the data to point to it. Certainly wants to get inflation back to 2. It's now 3, but it was 9. So the moves they've made have been good. It's incredible to me that with the rate movement we've seen, that the economy continues to move along, and that's because the consumer is strong. And he talked about the dynamics of the U.S. economy, innovation, just patience with businesses. It's a great country we live in, Frank. We're very fortunate to be here, and I think that's why our market's doing so well and why money continues to move into this country. So happy to see it. And as I said many times, the bonds are very attractive as well, 4 or 5%. You know, if equities can do that 9 to 10, the balanced portfolio, 7, 8, we're in pretty good shape.
Look at NVIDIA at another record high today, up nearly 32, almost getting close to 700 here as the AI craze continues. Jim, that helped propel the market higher last year, and here we are in 2024 with NVIDIA leading the parade again in an otherwise down market today, for example. What about NVIDIA here and these other AI-related names?
Well, sometimes this stuff gets a little ahead of itself, Frank. I've been through a bunch of these periods where anything AI-related or anything .com related or Y2K related, we can go way back. You know, some of these ETFs are loaded with these names, the ARK funds, which have had, you know, obviously a good run in the last, 6 months, but, we're just loaded up with so many of these names. The problem is the earnings aren't there yet for many of them. They are for NVIDIA, but even the valuations are high. So these companies that are just trading on multiples of revenue, got to be careful. We learned our lesson in 2022, and it could happen again. So, again, valuations are important. What people are willing to pay for future earnings is tough. And a lot of really good companies got cut in half in 22, and it was just a valuation game, even though the businesses were doing pretty well.
We're watching what's happening in the Middle East. It was a very nervous weekend with the attacks, retaliatory strikes by U.S. forces in the Middle East, and we were watching the price of oil bounce around. We did see oil moving up about 1% as traders assess the worsening geopolitical situation. Right now, hovering above $72 a barrel. What about that important part of the equation for the economy and indeed for investors out there?
Well, it's obviously a horrible situation that's going on in the Middle East, the Israeli-Hamas war, and now spread to other countries. And the U.S. is putting their foot down in places they need to. They're not going to allow commerce in the Red Sea to get disrupted, and doing what we need to do to keep the economy moving. I will say I'm surprised that oil is as low as it is in light of the violence of the war in the Middle East. You would have thought oil would be well above 80, maybe 90. But it's come way down. And by the way, it's helped inflation. You go to the pump now, $4.25 here in L.A. seems cheap, or $4.50, whatever it might be. Some threes in some neighborhoods. Back east, it's even less. I think that's been a very real positive for inflation. And, if you're an investor in energy companies, not, the greatest place to be, but they had a pretty good move last year off of the lows from the pandemic. But never a big fan of energy. Because I just think you're betting on that commodity price, and it's just volatile, and they're trading stocks, and I'd rather avoid trading stocks. I'd rather own things for the long haul.
All right, what about Tesla, which, of course, has had an epic run, but now an epic pullback here, down another nearly 7 today to 181 and change. You mentioned it at the beginning, maybe dropping off the Mag 7 list here, given what's happening lately. What about Tesla here at these levels?
Probably got a bounce down here. It seems to be a little oversold to me, but today's headline was based on, things surrounding Elon Musk and things that he was asking his board members to do, which I don't want to get into because I don't know what's true or what isn't. But he's become controversial. He's a brilliant guy. He's one of a kind. He's created some incredible products that we all use. That car is incredible. The new ones that are coming out in due time at a lower price point might be very helpful for the stock. But, it's volatile. He's volatile. There was some story today that he might be selling stock because of his situation with Twitter and the money he owes there. It's hard to say. But as we've talked about EVs, and there is obviously competition that's going to weigh on it. There's competition coming out of China. And as I said last time on here, and I'll say it again, the lack of charging stations is a real problem. And the infrastructure bill, I think, will be helpful for that. But we need more charging stations because you can pull into a charging station today and take 30 minutes, 40 minutes to get your car back to where it needs to be to take off. Or you can wait another 30, 40 minutes just to get a station. So it's great for the environment. I still think it's here to stay. It's the biggest growth area in the auto space, but it's not without its issues.
You mentioned the dot-com bubble and all the crazes we've had. Let's not forget about the meme craze. I mention it because I see shares of AMC Entertainment Holdings, the cinema company, theater company, hitting another record low today and at an all-time closing low, new intraday low as well as an all-time closing low, down to around 360. This is one of the so-called meme stocks, which, it's hard to believe. I think it got up to around 340 or so several years ago during that craze. So some important lessons there. What's your thoughts on AMC and the good old meme names that have faded?
Well, Bitcoin looks conservative, if you versus the meme stocks, right, Frank?
Yes.
Look, that almost makes the point of what you're saying before about some of the AI stocks. I don't want to suggest that they're meme stocks. Which are just things that are touted online, Reddit, different social media sites, and people get on board. So I'd avoid those things, buy companies for the fundamentals. And I say it all the time. I've been at this a long time. Things work over time, Frank. It's going to be the earnings and the cash flow increases that drive stocks. I like stocks that pay dividends. I like stocks, companies that increase their dividends at a regular rate. And you can do very, very well as an investor in those. These other speculative bubbles are sort of fun to watch. Maybe you play around. But as I said before, I'll say it again, you got to know when to sell them. And I think with a lot of these other stocks that we own, you don't have to focus so much on selling. If you like the story and the fundamentals continue, you stay with it. And over time, there's been some giant wealth created, companies like Microsoft. I don't want to just pick that one. Obviously, Apple, others in tech. Costco's been an incredible stock to own for a long period of time. Berkshire Hathaway's been an incredible stock to own for a long period of time. There's others out there. So look for the high quality, look for the dividend payers, buy stocks at fair valuations. And I think investors can do very well in this period of time.
And you got to have a strong stomach for all this, so I salute you for that as well. Now, the good old boring bond market has seen some pretty wide moves lately. Jim, what do you see happening there? We see bonds extending a route this past week, and those yields are moving up again. What's going on there?
Well, the big rally in the fourth quarter was led by the fact that rates were coming down based on the inflation data that was hitting the tape, right? So as the news improved there, we got a big rally in equities and a big rally in bonds. And as Powell said just last night, probably not going to move rates until, I don't know, mid-year maybe based on the data. A lot of people thought there could be a move sooner, February, March. So by the fact that the Fed is not lowering the Fed funds rates, which stands at 5.25 to 5.5.
Former Navy SEAL Sean Ryan shares real stories from real people from all walks of life on The Sean Ryan Show.
Laird Hamilton, welcome to the show, man.
The truth about a good surfer is ultimately that you understand waves. You're actually a wave reader. I could go to the beach, we're watching a wave come in, and I'll be like, oh yeah, that guy's going to crash.
Is that intuition or is that learned?
Yes, the learned becomes intuition. When you have that much volume of experience, it goes into the unconscious.
The Sean Ryan Show on YouTube or wherever you listen.
Plus the backup in the 10-year, which, got down to, I think, 360. Now it's 415. Got over 5% not too long ago last year. So there's a lot of volatility in the bond market, more than people recognize. When something goes from a 5% yield to a 4% yield, that's a gigantic move. So, as you said before, you got to have a stomach for this stuff. You have to have a stomach for bonds too. But basically, investors buy bonds, guaranteed to get their money back, hopefully from a municipality or the state or corporation, get a relatively high rate of return versus what a savings is paying, and hold on until maturity. So a good place to invest. And again, we're finally getting some returns there.
Are you comfortable with the 60-40 mix, that traditional 60 in stocks, 40 in bonds?
Yes, much more so than I was any time over the last, call it 12 months to 24 months. When we were at a period of time after the pandemic hit and the Fed brought rates down to zero, it was very, very tough to buy bonds then. It was okay if you owned them before then because you got a huge rally. But after that, it's just no return. So, buying bonds at 1%, half of 1%, obviously didn't work. It hurt Silicon Valley Bank, and that's why they went out of business. They loaded up on long-term treasuries, although it was a good credit in terms of a pricing mechanism where they traded, created a huge problem for them. But today you can buy bonds, if you go out long, 4%, if you stay short, 5.5%. There's other corporates and high yield in the 6, 7, 8 range. Diversify it, have some money in not just treasuries or munis, but look at some of the other stuff. And that could be a good part of the 40%. The 60%, I'd still focus on the growth companies over value. However, I would look at dividend-paying stocks. I would look at dividend growers. That's what you want to own. Those are the stocks with the highest quality. Facebook, Meta just announced their first dividend. I think I'd keep an eye on that because they'll probably start paying bigger dividends over the years. And if they can do that, they're doing that because the company is growing, the cash flows are increasing. Microsoft keeps increasing its dividend. So look at those dividend payers. Broadcom is another one that's done very well. But there's others in other industries. Cintas and the uniform business keeps increasing its dividend to it. The Quicken Software, they've increased their dividend bunch. So the information's out there. If you want to buy a fund, the Vanguard has a great dividend growth fund. It's got all these names I just mentioned, Apple, to name another one. So that's where I think the investors have their best bet. If you don't want to buy bonds, buy dividend-paying stocks.
All right, one of the flies in the Chardonnay, and this is something that the Fed chairman talked about on 60 Minutes last night on commercial real estate. He says it's a manageable problem, although pretty ominous headlines. Goldman Sachs, for example, estimating $1.2 trillion in mortgages due this year, and others say much of it underwater. Powell said that the commercial real estate issue is manageable, but some banks will close. What do you see on that front, and is that something that's going to impact the markets this year?
Well, I was, like I said before about Powell, he's a calming influence, and he certainly surprised me with his comments on commercial real estate. New York City, obviously the mecca, so to speak, of commercial real estate in the United States, is coming back. People are starting to go to the office. That isn't to say there aren't problems with certain buildings, there aren't problems with certain loans, but I think the big banks are going to figure out ways to refinance debt and keep these buildings going, and keep these landowners who have owned these buildings for long periods of time, who are still in very, very good financial shape. The lower quality, the B properties, small banks that have loaned to individuals, that's going to be a bigger problem. And that's what he said. You might start seeing some, takeovers of some smaller banks. But it certainly will benefit if rates stay down or go lower. It certainly will be more difficult if rates go up. As he said, $1.5 trillion coming due. It will get refinanced at some rate, and obviously higher than it's been. But if we can get people back in the office, Frank, which I think is coming, I think those commercial properties should do okay. And the REITs, which is a way to invest in that space, has already made a big move. But again, I'd look at some of those for yield and potential appreciation.
That's very interesting. And, of course, commercial real estate in downtown Los Angeles getting new attention with that graffiti put on that tower there that's been abandoned, basically a bankrupt project, and has been a big eyesore for years. We've been talking about this for years now. It took a graffiti artist to shed additional attention on it, but it's certainly right in the heart of downtown Los Angeles, across from what was Staples Center, now Crypto.com. To have a $1 billion project like that unfinished is certainly very, very big news. Jim, thank you very much for that thorough update.
Yeah, my pleasure.
Appreciate it very much. Jim HAUSBERG, Managing Director at Hightower Advisors, the HAUSBERG Group in Beverly Hills. Stay safe, Jim, and hope to talk to you again very soon. 4 o'clock hour now, here live on 790 KABC, streaming live online worldwide at KABC.com and the on-demand Mottek On Money podcast, KABC.com, and all the podcast platforms. Stocks pulling back from record highs. The Dow down 274 at the bell today, back to 38,380, coming off the record high we hit on Friday. The S&P 500 down 16 at 4,943, and the NASDAQ down 31 at 15,598. The yield in the 10-year note now 4.16%. Yep, you heard me. Bond yields have been moving up again, impacting fixed-rate mortgage rates, and we'll get an update on that coming up here shortly with Jeff LAZERSON, the president of MortgageGrader.com and Orange County Register real estate columnist. Checking the cryptos now, we see a Bitcoin up about 300 at 42,653, Ethereum up 11 at 2,298, and Doge at 8 cents. Gold pulling back $1.50 at $2,041.40 an ounce. NVIDIA at a record high. The AI chip giant moving up nearly $32 at $693 and change. Meta pulling back from its all-time high, down $15.58 back to $459.41. And Apple bouncing higher today, up $1.83 at $187.68. Mortgage rates moving higher. In fact, looks like the 30-year fix back above 7% now. The market's rethinking the path and speed of Fed rate cuts following the comments from Fed Chairman Jerome Powell on 60 Minutes over the weekend. We see the benchmark bond yields ticking higher, impacting the fixed-rate mortgage rates. Joining us live now is Jeff LAZERSON, the president of MortgageGrader.com and also Orange County Register real estate columnist. Jeff, thank you very much for taking the call here. How are the rates looking here, first of all?
Well, they're soggy and wet. That's what they are, Frank. It's
as we all
nasty. 6 1/8% on a 30-year fixed. 15-year fixes at 5.5% at one point, and that's up to $766,550. So that's a Fannie conforming. The high balance at $766,551 loan amount to $1,149,825 in LA and Orange County. 30 years at 6 5/8, and the 15-year high balance is at 6.5%. Jumbos are 6 3/4. So we're getting a lot of sixes in here, Frank.
All right, Jeff, and where do you see the rates go from here?
Well, in the near term, I think they're going to stay where they are, go up a little more. In fact, this was my prediction the end of last year when I did my prediction in the newspaper, and when I've been talking to you, I thought rates would spike a little bit at the beginning of the year, and in fact they are. So they'll be up. They'll stay up for a while, and then I think we'll see a hard crash in the second half of the year, but not until the second half of the year. It's going to be icky right now for quite a while. But
we had Selma Hepp on from CoreLogic on the home prices last week, and they're holding up as rates have been coming down. Jeff, what about home prices here now?
Yeah, Frank, the home prices are really strong. I mean, the properties aren't staying on the market. If you go out on a weekend to check out open houses, they're like ants out there. People are everywhere looking at these open houses, and there's very few properties for sale. And so their prices are going to keep spiking and keep going up. My wife was telling me about some Facebook thing where some home seller in down here in South Orange County was asking realtors, well, how much, who will do my listing for 4%? And there were 92 responses on this post, 92 at a 4% listing. So the agents are really hungry. They're doing stuff cheap. Prices keep popping up. So if you're a seller, for every day you wait, you're going to make more money if you wait another day to sell it.
Very interesting. So thanks for mentioning that. And any other trends you're picking up? And you do.
The Ed Milet Show showcases the greatest peak performers sharing their journey, knowledge, and thought leadership.
This is one of the all-time best pieces of advice ever given on the show.
Author and coach Tony Robbins.
You don't experience life. You experience the life you focus on.
Singer Jason Derulo.
My happiest moments have always been in the grind.
Singer Jewel.
I think healing is a gritty job. It's you looking in the mirror and going, what do I got? No one's coming for me. I'm coming for me.
The Ed Milet Show is available on YouTube or wherever you listen.
Great job, of course, in your column in the Orange County Register. Anything on the horizon for this weekend that you can preview for us?
Yeah, so there's a new program out there. It's a reverse second. So they have the reverse first mortgage, where if you're, if under the government program, 62 and over, or if other programs it's 55 and over, and basically you take out the equity and you never make a payment again. So there's a new product out there. If you don't want to touch your 3% first mortgage, but you're at least 55 years old and you want to pay off bills or build an ADU in your backyard or get rid of your 10% home equity line of credit. So it's a reverse second, no payments ever again, and you can take a bunch of money out of the property. Of course, it's negatively amortizing, meaning the loan balance goes up because you're not making a payment, but it's really a very interesting tool, and so I'm going to be writing about it this week in the Orange County Register column.
Very interesting, and of course, we're in the land of natural disasters, and see one unfolding today with all these mudslides and floods. Jeff, following storms like this, I remember the El Nino storms. Remember how Laguna Beach was hit hard back in those days, and now we have situations all over here. Tell us about your observations over the years on how various real estate markets and neighborhoods rebound following disasters like this.
Well, Frank, sometimes they do rebound, sometimes they don't. I was actually going to bring up the issue of homeowners insurance. One of the things that we're just seeing an astounding increase in is the price of homeowners insurance. It could be a condo association, or it could be your own place. And if one association I'm going to be writing about it was up in Newport Beach, they hit an assessment, each homeowner it was crazy money, another like $500 a month, just so they could stay on the Fannie Mae side of things and have enough insurance. So with all the storms and stuff, I think insurance prices are just going to keep going up. There's very few flood zones in Southern California, so I don't expect people to be running out and getting flood insurance, and hopefully if there are any floods that the government's going to make it a disaster area so you can get government help. But that's kind of a dangerous problem here because we really don't have many flood zones in Southern California, so people don't get flood insurance like they might in Florida.
Yeah, are people starting to bail in some of these condos where you mentioned these homeowners association dues or some developments that have associations? Are people starting to bail out for that reason here?
Well, either they're bailing out or they're trying to make sense of it because, let's say that you own a rental in a condo association, for example. It's very difficult to make any money on it with with all the association fees and all the other stuff you got to deal with. So I expect people to start shying away from condos because they're just getting so expensive.
That's a very good point, Jeff. Well, thanks very much for that comprehensive update on what's happening with real estate and the mortgage business here. Jeff Lazerson, the president of MortgageGrader.com and Orange County Register real estate columnist. We'll be looking for you this weekend in the paper. Jeff, thank you very much for taking the call here this afternoon, and please stay safe.
Thanks, Frank. You too.
The Union Rescue Mission in downtown Los Angeles is helping thousands of people daily, and now with the weather like this, you can imagine they're overwhelmed and turning to you, the Angels, and the City of Angels for help. Joining us live now is Richard NEWCOMB, Vice President of Philanthropy at the Union Rescue Mission. Richard, thank you very much for taking the call here in the midst of this storm and this crisis. Give us an update on what's happening there.
Good afternoon, Frank. Thrilled to be with you on your show today. It's a dire scene here. It's homelessness is out of control here in Los Angeles County, up 9% the past year to 75,000 human beings that are experiencing it. But the sad number is 73%, 55,000 have nowhere to go today or over this 3-day window with this terrible storm. That means there's 55,000 human beings living in a car, an RV, a tent, a makeshift shelter, and just no place to go. So it's challenging. I think more people die from hypothermia in Los Angeles when a storm like this hits than they do in New York City, because New York City has a law that if it's below a certain temperature, you have to come off the streets. And they also supply much better services. They only leave 5% of their population that's experiencing homelessness on the street. So here we're 73%.
What is the situation there now? I know you don't turn anyone away, and sadly, more families are homeless, right? Women and children, seniors. What is the scene there today?
Last night we had 1,356 precious souls in our 3 different locations. About 950 of those were moms, dads, and kids. Nearly 200 were seniors. And we do all that without government support because we have sober living in our facilities. You know, if you take government funds from the city, county, or the state, you have to operate your organization under the harm reduction model, which means people who are allowed to use drugs and alcohol. And, you know, we just don't embrace that policy. And so we have room for more. You know, it's going to be cold. It's going to be wet. And I checked with our VP of Emergency Services, and we have probably 50 spaces for anyone that is in a dire situation and would like to come off the streets, that we could welcome them in tonight. And it's not just for a 48-hour window at emergency shelter. We have fully wraparound services. We collaborate with Pepperdine, USC, UCLA for medical, dental, mental care, and you know, maybe somebody will come in through our doors in the next 48 hours and move on to a better life from all that we have to offer here.
On the air live with Richard NEWCOMB, Vice President of Philanthropy and Social Enterprise at the Union Rescue Mission in downtown Los Angeles. You're reaching the business audience here now, Richard. I know you had a fantastic supporter in the business world. He was a giant and also a great friend, and also had appeared on this program over many, many years and many times, and that is the late, great Scott Minerd, who was the chief investment officer at Guggenheim Partners, who unfortunately passed away just over a year ago. I know he was one of your biggest supporters, and we all miss him very, very dearly. But for those who want to follow it in a giant like that, what's the best way to support the Union Rescue Mission?
Well, Scott was a giant. He was incredible. You know, he started with the gift of $150 in October of 1998, and he went on to become the most significant donor in the history of the Union Rescue Mission. He passed away December of 2022. And we've doubled the size of Union Rescue Mission over the last 5 years. So we're from a $27 million organization to a $54 million organization, now have 3 locations, built a family center in South LA that is just thriving and doing great work, thanks to his support. And so with Scott exiting the planet, it's more challenging. You know, it takes $96,000 a day to run this organization and for our 3 locations. So we would love people to come alongside of us and help us do this work. I mentioned earlier, we don't take government support. So, you know, please visit us at urm.org, and we'd love a donation there. My contact info is on there. I could be reached at rnewcomb@urm.org if somebody wanted to email me and collaborate with us. We would be thrilled for that partnership. You know, 85 cents of every dollar goes to help people here. Only 15 cents of every dollar donated goes to administration and fundraising. That's an excellent mark there for an organization doing this type of work here in Los Angeles. We even get a perfect 100 rating from Charity Navigator. So we'd love people to come alongside of us and help us. And if somebody needs to get off the street, there's a button on that same website, urm.org. Upper right-hand side, I need emergency services. You could click that number. You could call it tonight, and we could help you get off the street if you're in a dire situation.
That's so important, that there is hope and there is help available for those who are desperate today, especially under this terrible storm. And for this audience, certainly the fact that you do not take government money is a badge of honor, Richard. People are very impressed with that, but certainly it means that business people and individuals need to support you out there.
That would be great. You know, we wish the government would too. We wish that all the funds didn't flow through HUD, who has this requirement that you operate your facilities where people can use drugs and alcohol. But like I said, we had 950 moms, dads, and kids last night. What kind of environment would that be if people could freely flow with alcohol and drugs in our location? So we're sticking to that policy, and we welcome everybody in with open arms and just trying to be of assistance. Been doing it for 133 years, and we would love everybody's help to help us continue to do more.
Isn't that something? And for those who are just hearing about this for the first time, you're not taking government money, because if you did, you'd be required to allow drug and alcohol use on the premises, which you do not. The so-called Harm Reduction Act, which I think is a misnomer, right? Tell us more about that so people understand what's really going on here.
I guess the government agencies that have embraced this policy believe that you're doing people harm if you force them to walk into an environment and they can't have the product that they're addicted to. And so it's just become the norm. Well, all of these H and HHH properties that are being built, they're all being run under the harm reduction model, and people are overdosing in those rooms. And I think the Skid Row Housing Trust is in receivership because it's become insolvent from lawsuits, and the board's been sued and all that. So the policy hasn't worked, and so we're certainly not going in that direction. Wish they would change the government policy. Again, 85 cents of every dollar is going to life-changing programs are very efficient. So I wish the government would change that and would help support us. We could do even more. You know, we've doubled in size the last 5 years. If we could have the community and the government supporting us, gee, just think how much more we could do.
And it's inspiring to hear the stories, the amazing stories, really, of what you're doing there. Also at Hope Gardens, which is a facility that takes care of homeless women and children, right? Tell us more about that one.
Correct. That's on 77 beautiful acres on a canyon that most people don't even know is out there. It's kind of where the 118 and the 210 meet. We've been there for 16 years. It was a retirement village. It took 34 meetings and $1.5 million in legal fees to get the conditional use permit. But it's 2 to 3 years. A mom who was imprisoned or addicted to drugs or both. We've done a great job reuniting children that were in foster care with their mothers. Almost none of them have their GED or high school education. So we help them get that. Many go on to college. Many go get jobs. We had 2 moms graduate recently. One had saved $18,000. One had saved $20,000 while in our programs. It's total life transformation. And somebody coming in our door tonight, getting out of the rain, would have access to that opportunity in a beautiful place that's just an oasis covered with the trees, oak trees, and beautiful hills.
Richard Newcomb, thank you very much for taking the call. I'll let you get back to your important work there. You certainly have an open line with me here, and thank you very much for that important message here this afternoon. That is Richard Newcomb, Vice President of Philanthropy and Social Enterprise at the Union Rescue Mission in downtown Los Angeles. Stay tuned now for the 790 KBC News Blitz with Randy Wang. This is Mottek On Money on 790 KBC.
America starts the day with America in the Morning. Hi, I'm John Trout, your host for the latest news, politics, entertainment, business, and weather. Our staff of correspondents provide a fast-paced look at the world with specialized reports from where news happens.
In New York, I'm Sue Aller.
I'm Charles Tilatesma. Sagar Meghani, Washington.
I'm Jennifer King.
I'm Clayton Neville.
I'm Kevin Carr.
I'm Archie Zaraletta.
Concise, accurate, and fresh each day.
America in the Morning, the podcast, available wherever you listen.